The Art of Value Investing by John Heins and Whitney Tilson is a book that shares the principles of value investing from famous investors, including Warren Buffett and those who follow the philosophy of value investing. This book provides valuable lessons for those who want to get acquainted and learn more about how to invest intelligently. Here are the key lessons learned from the book. 1. Look for businesses with superior intrinsic value. One of the core principles of value investing is to look for businesses with intrinsic value that is higher than their current market value. Intrinsic valuation: value investors need to determine the true value of a company through factors such as free cash flow, sustainable earnings, and net assets. Choose companies with growth potential. Investors need to choose companies with stable business models, long-term growth potential, and the ability to maintain profits in the future. 2. Invest in companies with sustainable competitive advantages. Companies with sustainable competitive advantages will be able to maintain and grow in the long term. This is an important factor in the investment strategy of value investors. Sustainable competitive advantages: investors should look for companies with unique competitive advantages such as strong brands, low production costs, or proprietary technologies. Low competition market: companies operating in low competition markets, or with the ability to maintain competitive advantages, will have the opportunity to grow sustainably and increase value in the long term. 3. Choose ethical and competent managers. Heins and Tilson emphasize the importance of investing in companies with talented and ethical management teams. Talented and honest management: investors should look for companies with competent management teams who always put the interests of shareholders first. Assessing management ability: one of the deciding factors in investing is assessing the ability of the management team. Investors need to make sure that the management team has a clear development strategy and can maintain the company's values over the long term. 4. Look for investment opportunities when the market is ignored. An important lesson from the book is to look for investment opportunities when the market ignores the true value of a company. Sell-offs and market psychology: the stock market often overreacts to negative news, leading to a sell-off of stocks without taking into account the true value of the company. This is an opportunity for value investors to look for undervalued stocks and invest in them when the true value of the company is not reflected correctly. Margin of safety: value investors will look for stocks with a high margin of safety, which means stocks with a market price lower than their intrinsic value to minimize the risk of investing. 5. Long-term investing and patience. One of the most important lessons that Heins and Tilson convey is patience in investing. Long-term investing: value investors should not seek quick profits from short-term transactions. Instead, they will invest in companies with the potential for sustainable growth and hold the stocks for the long term. Patience is the key to success. The process of value investing requires patience, because sometimes the value of a company is not immediately reflected in the market. 6. Assessing and comparing value with stock price. Heins and Tilson advise investors to always compare the stock price with the actual value of the company to ensure that they are not overpaying for a stock. Thorough analysis: investors should analyze financial statements, management status, and other factors to have a comprehensive view of the company's value. Calculating the real value: calculating the real value of a stock is very important in making investment decisions. Only when the stock price is lower than the real value, the investment will really bring long-term profits. 7. Set principles and discipline in investing. Heins and Tilson emphasize that a successful investor needs to have clear principles and adhere to discipline in every investment decision. Set investment principles: investors should have a clear system of principles and criteria when choosing stocks to invest in, such as only choosing companies with long-term value and excellent management teams. Investment discipline: discipline is an important factor that helps investors maintain a stable mentality and make the right decisions, even when the market fluctuates strongly. 8. Don't be afraid to fail and learn from your mistakes. Another important lesson in value investing is not to be afraid to fail and always learn from your mistakes. Learn from your mistakes: value investors will never avoid failure, but it is important to learn from your mistakes so that you can avoid making them in the future. Improve your strategy. Mistakes will help investors improve their investment strategies, which will help them become more successful investors in the future. Conclusion. The Art of Value Investing by John Heins and Whitney Tilson provides important lessons from great value investors and helps us better understand the fundamentals of long-term investing. These lessons emphasize the importance of finding true value, investing in companies with sustainable competitive advantages, and maintaining patience and discipline in the investment process. These principles are the foundation for building a solid investment strategy and achieving long-term success.